similar story, of what we've been focusing on. And there's two main points. Sheikh Winch definitely know, and
Yeah, it's
I'll
good.
dive in. All right, so the first one you can see, if you look at the green little circles, again, back with IBB, we were talking about. I was trying to buy a lot of stocks that I really liked in the middle of March when everything was really looking not the best. And again, didn't really get the best price in the time. Again, no one's really buying the low. And I was speaking with Carl about this before about dollar cost averaging into the position, especially his MNRN where he's up like 400%. Where when we do dollar cost average, when you can dollar cost average on the way up, like for example this Disney, buying this 96 and then eventually buying 104, dollar cost averaging on the way up, meaning that this stock is moving in my favor and I'm adding to the position without having to give away good stock. So, we saw it start to flag again, similar to that Intel. We saw that 100, 98 area holding as support. And I added up through that 104 versus it, increasing my average in the name. And I'm still looking for it to eventually break that 112, but now I don't have to be perfect buying that 112. I can sit and kind of buy on these pull-ins and it increase my cost base as this name trends higher, if it does. And if not, you just keep moving your stop up to your break even, and it doesn't work, you get out, you don't lose much. But that's been that main theme so far for us, has been buying up off of support versus trying to buy those resistance rate breakouts and being perfect in them.